Hi, this is Zak Mir with the Bulletin Board Heroes here on Share Talk for Friday, the 3rd of July. Starting off with Amigo Holdings, where it seems that some people on Twitter are slightly cautious about the rise and don't quite believe it. But we've got those large green candles there. We've broken that falling wedge from March and April. In fact, it was two wedges there. And the view is, I suppose, at least while we're above the 20-day moving average, that purple line there at 10.5 pence, there could be further upside, or should be further upside. Initial target, the 50-day moving average at 17.87 pence. Big target for if you're a complete fan of the company would be the top of that broadening triangle from March, and the 200-day moving average at 44. But exactly what could trigger that remains to be seen. But at least from a charting perspective, that's where we are. On to a stock that I covered yesterday. It's quite tantalizing here at AMGO Minerals in the sense that it looks like it's all about breaking the, or trying to break the 200-day moving average. That's currently around the 1.6 pence area. We've broken that intraday yesterday and today. But a weekly close above that line could be quite significant. I obviously have that rather ambitious looking target there at the top of the broadening triangle there from May last year, as high as 5 pence. Initial target, I suppose, 2 to 2.5 if we're lucky, but that's where we are. And the upside really valid while we hold above the 20-day line there at 1.35. So not wanting to risk too much, even though I gather the spread there is quite wide. New stock for the Bulletin Board Heroes comes in the form of DWF Group. Not normally a good idea to look at a falling knife situation, but interesting here that we've got the much lower low here for July versus March, but actually the RSI trace didn't go as low this time. So we do have an example of positive divergence, a very strong positive divergence. So let's see how that maps out. End of day close on the, if you want a sort of a momentum trigger, end of day close above 55 pence. And that line from the end of May would be the momentum buy trigger. Otherwise, if you're happy to catch a falling knife, the RSI is given the signal already. Stop loss obviously back below the present July low at 45 pence. In terms of what the upside could be, I suppose back to late June resistance in the low 60s would be the favoured destination. But it'd be interesting to see whether the bullish divergence there does actually come up trumps for the bulls. Another stock that I've never looked at here on the Bulletin Board Heroes is Fincap. Here you can see that this is not exactly one of the most liquid situations around, but given that we've got an island reversal there through 20 pence, and we're breaking the 200-day moving average at 21 pence, there might be a chance for some people who are in the mood to go for a top of broadening triangle from April last year as a target as high as 32 pence. Stop loss at this stage, if that is possible, if it's possible to do that, would be back below the 50-day line at 17 pence. But just worth noting that Fincap looks like it is on the move. A stock which is well into its bull run here is Gaming Realms. Took a long time to finally base out and deliver a recovery. I suppose in March we had that final clean out below 5 pence. Golden cross between the 50 and 200-day moving averages at around the 11 pence level at the beginning of last month, and we making good progress above last month's peak at 14.5 pence so far for July. The message at the moment is while we're above the initial June resistance at 14.5, looking for a top of June 2019 price channel target as high as 26, 27 pence over the next couple of months. Only back below 13 pence on the floor of the channel from the March uptrend line, really delaying the upside scenario. Stock which is a requested one from a new Twitter friend of mine is JKX Oil and Gas. Here you can see that we've got the shares bouncing along the bottom of this rising trend channel from March, so nominally around 16.5 pence, the line in the sand there. While we're above, let's say 15 pence or 14.75 actually, which is the April support, we could see shares of JKX head up towards the area of the 200-day moving average at 23 pence. If you're cautious on the shares, maybe wait for an end-of-day close or a weekly close back above the 50-day moving average at 17 pence before thinking of pressing the buy button. But to my mind, it's a little bit early to be thinking of bottom fishing that particular situation. Another new stock, I think, for the Bulletin Board Heroes today. Plenty of new ones. I've got Jaywing here, a broadening triangle here on the daily chart from December. Bounced off that at 2 pence, and while we're above that, looking for a top of broadening triangle target as high as 6 pence over the next couple of months. Nice confirmation signal would be a break above the 50-day moving average and the 3 pence level, which was support on the way down from December as a momentum buy trigger before we target 6 pence with a degree of confidence. One of the stocks of the year to date has been Novacyt, covered here first, I think, at the end of January, obviously around that particular area there. We've had a decent consolidation for the shares over the last month or so, bouncing along the floor of this rising March trend channel, nominally around the £2.40 area. So above that, we're looking pretty good for a new leg to the upside. Initial target here, while we're above £2.40, would be up to a retest or for a retest of June resistance at £3.60. And obviously the big picture target here is up to £6, which is the top of the rising March trend channel that I've drawn. We broke the resistance line there from April around the 250 level earlier in the week and have consolidated well since then. Weekly close above the 34-day moving average, which is the yellow line there on the daily chart, would be a positive for the stock, as would a break of this week's initial resistance at £2.83 early next week. Moving on to a stock which is not quite so vibrant in terms of its charting trajectory of late, but looks as though we may have some signs of a rebound at tissue Regenix. Here you can see the first inkling that we might be breaking that line of resistance from May around the 0.35 pence level. End of the week close above that, or end of day close above that over today or for early next week could be the first trigger for a move towards the top of that rising trend channel from May up to the 0.57 area, which is also the area of the 50-day moving average. Stop loss on the buy argument at the moment back below 0.32, which is the uptrend line from June. Finishing off with perhaps a rather esoteric choice here in terms of Vela Technologies. Just the first hint now that the shares are and have established a base at or just below the 0.05 pence level, just nudging the 200-day moving average as well around the 0.07 pence level as well, and an end of day or a weekly close now above the 200-day line could be enough to take Vela back up towards the top of a rising trend channel from November as high as 0.13 pence over the next month or two. That's it from me today. Join me again next week.